Yet again, we have another iBuyer company that may be going under.
Offerpad.
So, what is Offerpad?
They're called instant buyers. So
Offerpad was probably the easiest to get an offer on your home.
It simply doesn't work. I mean, it's a losing model.
Zillow, Opendoor, Offerpad.
Offerpad, what's going on with all these cash offers? And is it a real deal? Is it a scam?
What's going on with iBuyers? Zillow offers sank in November 2021. Redfin Now shut its doors in November 2022. Opendoor just posted a $1.4 billion loss. Offerpad is the latest in the string of iBuyers facing the axe. It recorded a $148 million loss in 2022. Offerpad also has a more conservative approach to iBuying than Opendoor, and it's still struggling. Opendoor trained its algorithms in an upswing market. That technology faltered when market conditions changed. Offerpad's approach was supposed to be more nuanced. They relied on local partner agents to come up with the best offer. Despite this, Offerpad is barely keeping its head above the water. But does that mean the iBuying business model itself is flawed? Or is Offerpad doing something wrong here? Let's examine.
This video is brought to you by Houzeo, America's most advanced home buying and selling platform. Americans across the nation are saving on commissions with Houzeo.com. You can too. Check out Houzeo.com on the web or the Houzeo mobile app.
Offerpad, a pioneer. Offerpad was established in July 2015 by co-founders Brian Baer and Jerry Coleman. Instant buying wasn't a new idea back then. Opendoor, the actual pioneer, has been around since 2014. Offerpad's process is very similar to Opendoor. If there's a difference, it's in the localized services Offerpad provides.
We're definitely shaking things up a little bit. And what we've done is we've found and figured out a way to take all the stress and hassle that comes along with selling your home the traditional way and doing it in a competitive manner. That makes sense.
It offers moving, repair, title insurance, and mortgage services. These asset-light offerings make this iBuyer somewhat unique in this market. Opendoor was propped up by Silicon Valley's VCs like Keith Rabois, but Offerpad has a real estate veteran at its helm. Brian Baer has more than 15 years of experience in this industry. Before he founded Offerpad, he founded Baer Group Real Estate. He also co-founded Lexington Financial and Bridgeport Financial Service.
At Offerpad, what I'm proudest of is we've changed real estate really forever. People can say we've disrupted, but the new iBuyer model that we started and really pioneered and is given the consumer a different option they didn't have a few years back. So we're really proud of that.
Baer isn't one of those Silicon Valley hotshots, investing in anything that just strikes their fancy. Brian Baer understands the ins and outs of the real estate market. The co-founder, Jerry Coleman, is a serial entrepreneur. Before Offerpad, he acquired a partnership with Blackstone Group, gaining funding of $10 billion. He brought those formidable skills to the table at Offerpad.
So Brian and I have been in real estate for over 20 years. We've seen over that time all of the challenges with selling a house and buying a house. We've always said there's a better way to do this, and so we created.
Brian had the real estate expertise. Jerry brought his ability to get funding. A real dream team. Investor support. Like Opendoor, Offerpad also had a few funding rounds. They raised $30 million on the 25th of January 2017, $50 million on the 16th of May 2018, and $75 million on the 14th of May 2019. Offerpad obtained some debt refinancing and raised $200 million post-IPO. In total, it raised $355 million until the 21st of September 2021. Offerpad's poor financial performance in the last few quarters didn't deter anyone. In fact, some early investors are pretty confident about the company's chances. The company sourced $90 million in private funding from Brian Baer, Roberto Sella, and establishments like First American Financial Corp. Stock performance. Offerpad went public through Special Purpose Acquisitions Company, or a SPAC, in March 2021. It was valued at $3 billion back then. At its peak, the stock was at as much as $20 per share. The value dropped to less than $1 per share back in October 2022. Since then, Offerpad has languished under the $1 per share mark. The company also received a notice of non-compliance. Companies are delisted from the New York Stock Exchange if their share price remains below the $1 mark beyond a 30-day trading period. Let's look at the company's latest financial report to know more. Offerpad Financials. It is easy to make plans and claim everything will work out, but the reality is often different. Offerpad released its 2022 financial result February 2023. We've gone over the numbers with a fine-tooth comb to understand where Offerpad stands now. Homes bought and sold. Offerpad needs to maintain an inventory of homes to remain profitable. According to its financial report, Offerpad bought 769 and sold 749 homes in 2020. In 2021, it bought 9,023 homes and sold 6,373 homes. And in 2022, it bought 9,034 homes and sold 10,635 homes. Offerpad crossed 10,000 home sales in 2022 for the first time since its founding. This sounds impressive, but remember, 2022 was a fast-paced market, and homes were selling like hotcakes. Offerpad's financial performance remains poor. The increased home sales didn't generate profit. In fact, the company suffered devastating losses throughout the year, with negative figures in almost every quarter. And to sustain this buying and selling process, Offerpad had to borrow extensively. Money borrowed. Buying and selling isn't cheap. Offerpad, like Opendoor, needs money to purchase assets, and Offerpad has borrowed a lot. In 2022, Offerpad borrowed $3.17 billion and repaid $3.54 billion. This included both senior debts to purchase assets and mezzanine debt for other costs. Without these loans, they couldn't run their business. After all, they weren't earning enough to cover those essential costs. By the end of the year, they had accrued $666 million in current debt and $4.22 million in non-current debt. They borrowed more money to repay previous debt and are now stuck in an unfavorable debt trap with high interest rates. Interest cost analysis. Offerpad's interest costs increased significantly in 2022. It paid over $45.9 million in interest costs alone. That's 3 times the amount it paid in 2021, which was $15.8 million. The earning before interest and tax, EBIT, was approximately negative $127 million. But that's not all. We have expenses and overheads. Running a business costs money too. Let's take a look at some of Offerpad's most significant expenses. Its sales, marketing, and operation expenses amounted to around $239 million in 2022. Similarly, its general administrative expenses were about $58 million. The technology and development expenses added up to $12 million. Total expenses outside of interest costs were at $309 million in 2022. They are spending like crazy this time around. They're certainly not earning enough, as evidenced by their revenue and losses. I mentioned before, Offerpad did manage to sell more than 10,000 houses last year, but what did they earn? Offerpad's revenue was approximately $2.1 billion in 2021 and $3.9 billion in 2022. The company generated a gross profit of approximately $207.8 million in 2021, $182.4 million in 2022. What do these numbers mean? At first glance, it seems like the sales are good, but ultimately, the company is loss-making. In 2021, Offerpad's net income was around $6.5 million. That wasn't enough in any case. But then it suffered a $148 million loss in 2022. Damn! Current contribution profit after interest. Offerpad's financial results includes a breakdown of their contribution margin. Let's look at it to understand where they stand now. In 2021, Offerpad's gross profit was at $207.8 million. In 2022, it was at $182.4 million. They sold 6,373 homes in 2021 and 10,635 homes in 2022. The gross profit on every home sold was around $32,600 and $17,200. This is important. Look at the difference in numbers year after year. So the contribution profit ended up being $162.8 million in 2021 and $147.1 million in 2022. They made approximately $25,554 in contribution profit on every home in 2021 and around $13,839 in 2022. In 2021, the contribution margin after interest was $145.8 million. For 2022, we deduct interest expenses of around $48.4 million to come to our contribution profit margin after interest, which is $98.7 million. Divide this by the number of homes sold in 2022, the contribution profit after interest per home sold is $9,286. To get an estimate of their break-even point, we have to divide their total fixed costs by their contribution profit per home sold. As shown earlier, the total cost was $309.7 million. However, we have to remove the holding costs as per the financial statement, which is $9.26 million. We divide $300.4 million with approximately $9,300, which is $32,310. Offerpad needs to sell an additional 32,310 homes per year just to break even.
Wait, what?
That's after selling the 10,000 units they managed in 2022. They need to sell much more to make a tidy profit. Obviously, they are in a bad position. Is Offerpad following the sinking iBuyer trend? Many experts consider iBuying a fatally flawed model. Offerpad has taken steps to mitigate the iBuyer crisis. It doesn't want to be just an iBuyer. In the company's latest earnings call, Brian Baer said the company still aims to be a full-fledged platform for all things home. In the latest earnings call, the CFO of Offerpad, Mike Burnett, mentioned that their contribution margin target after interest has always been in the range of 3 to 6%. He mentioned they should see the bottom of that range soon. In 2022, they managed to hit 2.5%, but that is a big drop from the 7% in 2021. Sorry, but that is ridiculously low.
Pam, we're dying here.
Tech companies usually have contribution profit margins in double digits. Unfortunately, Offerpad's position doesn't look good. Its current interest coverage ratio is at negative 2.77. Anything below 1.5 means that the company may struggle to meet all interest expenses. Offerpad will struggle to survive. With low contribution margins, interest coverage ratio, and a higher debt burden, Offerpad is gonna struggle to survive. Fortunately, they seem to have considered their situation carefully. Brian Baer pitched Offerpad's asset-light services during the recent earnings call. That included Offerpad Flex, mortgage services, local moving services, and repair offerings.
But really what I created Offerpad to do was to be a solution center, a one-stop solution center. So whatever you can think of real estate, we're going to have a product or a solution for that customer that's going to help them with the timing, the convenience, and the certainty.
Mike Burnett mentioned in the earnings call that they have a business plan that supports their current level of capital. So they have a realistic plan in place. Only time will tell whether their measures will be effective. Without a big pivot, Offerpad will not live to see the dawn of 2025. So what do you think? Will Offerpad's attempts to overcome this crisis work? Or will this iBuyer follow others and walk out of the industry? Let us know in the comments below. And don't forget to like, share, and subscribe. And if you liked this video, you might also like our analysis of Opendoor's business model and financial results as well.
I'm not surprised you laying on the pavement. Was personal so you can keep the payment. Look in my eyes, you cannot leave here alive. I don't thrive in any environment. Was that 12 but we did it for 9? Been talking at my back, but that's the only way to see it.